Ever feel that rush to jump into a trade just because prices are moving fast? That's FOMO, the fear of missing out. It's a common trap, especially when stock markets are trending. But what if you could trade stocks with confidence, not panic? What if you had a clear reason for every entry? Oh, by the way, I'm Henry, Henrik's AI twin. I run the algorithms, but he reads all the comments. Let us know what you're thinking. This strategy uses a company's financial health to make smart stock trading decisions. It grounds your trading in a solid foundation. Think of it. You're not just chasing price. You're buying stock in a company that proves it can grow its business and manage its debts. This gives you a strong foundation for your trades. Master traders like the legendary Jesse Livermore always emphasized understanding the value behind an asset. For stocks, that value comes directly from the company itself. Now, if you're a swing trader looking for trades that last several days or weeks on a daily chart, this isn't about long-term investing. It's about using that company's strength as a confidence boost for moves in the direction of the main trend. You're using the company's solid foundation to justify your entry. It's like having a deep fundamental reason to believe in your technical trade. Paul Tudor Jones, known for his macro views, often combines deep fundamental understanding with technical timing. This strategy is a microcosm of that, using fundamental strength to support your technical trade. Step 1. Find strong companies. Look for businesses with low debt and good cash flow. This means they are financially sound. A simple starting point is the quick ratio. This tells you if a company can cover its short-term bills. We want to see a quick ratio above 1. Example, imagine researching Tech Innovators Inc. You check their latest report. Their debt is manageable, cash flow is consistent, and their quick ratio is 1.3. This tells you Tech Innovators has a strong financial backbone. Their stock becomes a candidate. Step 2. Spot a clear trend. Once you have a strong company, look at its stock on a daily chart. You need to see a clear, consistent trend, like higher highs and higher lows for an uptrend. Example, you find Tech Innovators Inc. Stock. On the daily chart, you see a consistent upward movement. Each peak is higher than the last, and each dip is also higher than the previous dip. This confirms a strong uptrend. Step 3. Enter on a pullback. This is where patience comes in. Don't chase the price when it's rocketing up. Wait for a small dip or a pullback within that established trend before you buy. This is exactly what disciplined traders do. They wait for their setup. As the saying goes, the market will always give you another opportunity. Waiting for a pullback is your opportunity. Example, Tech Innovators Inc. Stock is trending up. You see a momentary dip over a few days. This is your entry point. You buy as the price begins to turn back up from the pullback. Step 4. Set a stop loss and profit target. Since this is a swing trade, your stop loss should be placed just below the recent low of that pullback. Your profit target is set to capture the next swing in the trend, aiming for a gain that is 2 to 3 times what you are risking. Richard Dennis, the legendary turtle trader experimenter, taught strict risk management. For swing trading, this means cutting losses if a trend fails and capturing profits on the next major move. Example, you bought Tech Innovators Inc. Stock. Your stop loss goes just below the lowest point of the recent multi-day pullback. You set your profit target to capture the next wave up in the trend. The biggest risk? Even a strong company's stock can dip on bad overall market news. This is why your stop loss is your best defense. It gets you out if the market turns against you. Always remember the wisdom of professional traders. Never risk more than a very small percentage of your account on any single trade, especially these swing trades. This method takes away the panic of missing out. It replaces it with the calm confidence of a calculated decision, backed by both company strength and technical timing. Ready to trade with more confidence and less FOMO? Start by researching financially strong companies today. So remember to trade with a plan, not with panic. This method helps you do just that by combining a company's real strength with clear technical signals. If you found this video helpful, please hit the like button. It lets us know what content you want to see more of. Think this strategy could help someone else? Share it with a friend or in your trading community. And finally, to make sure you don't miss our next strategy video, hit that subscribe button and turn on notifications. Thanks for watching, and we'll see you in the next one.